What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and the first thing I need to say is ignore the comments on this video. Literally anytime the word Bitcoin is mentioned on a YouTube video, the fraudsters and the scammers come out like flies. And so I apologize for the mess that you are sure to see in the comments section below on this video. Second, on this channel, I talk a lot about stocks, gold, the Federal Reserve, inflation, deflation, the economy, and I don't talk as much about Bitcoin. And that's despite the fact that usually, people who enjoy or appreciate Bitcoin and cryptocurrencies, they usually have very similar outlooks economically, philosophically, about the government, about money, about investing. And quite honestly, the reason why I haven't talked about Bitcoin a lot on this channel is frankly because it's just not my area of expertise. That being said, the more I learn about it, the more I like it. And so today what we're going to talk about on this video is the reason why I've recently increased my total allocation to Bitcoin in my portfolio from 1% to 5%. Ready? Let's dive in. For plenty of you, this is going to be information that is not new to you, but for anybody who's interested in understanding why somebody might buy Bitcoin at all, here's a short primer. Number one, there has never in global history been a money that's been actually designed to operate as really good, sound, hard money. The money that has been used in the past has either been used because it just evolved into use as money, or it was designed by a central planning committee or a government as a way to benefit the central planners like the government not to operate as good money. Number two, we know that the societies that use the hardest monies historically have always generated the most wealth. Arguably, the most prosperous time and place in world history was the United States in between the time of the Civil War and the creation of the Federal Reserve. That was about 1870 to about 1900 or 1905. There was massive deflation, there was massive wage deflation, and yet the purchasing power and the wealth and prosperity of people increased in real terms dramatically during that time. And obviously we know the opposite is true as well. Wealth destruction occurs when you move downside the other side of the spectrum to fiat money that is very easy, where it can be created and expanded exponentially very easily. So Bitcoin was built to be just the hardest and the scarcest and the most sound money. The properties of fungibility and divisibility and hardness, where it can't be counterfeited, can't be destroyed, easily accessible, easily transferred. All of these properties that make something operate well as money, Bitcoin has better than arguably anything else when you put them all together. Now we know right now that governments all around the world are in the process of destroying their own money that everybody has to use as quickly and as effectively as possible. And the more government destroys money, the more regular people and institutions and corporations and investors are going to look for alternatives to fiat. And so really it's kind of just a game of numbers. The more people looking for an alternative, the more people are going to stumble upon Bitcoin. And the more people realize their money is being destroyed, they're going to look for money that can't be destroyed. And when you look for money that can't be destroyed, the hardest, the soundest money, you're either going to come to Bitcoin or you're going to come to gold. Now, large-scale adoption, institutional investment into Bitcoin has only just begun. There's no allocation to Bitcoin in retirement funds and pensions. There are a few corporations, just like MicroStrategy has just allocated their entire cash balance now to Bitcoin, something around $500 million. And so we're starting very slowly to see large-scale adoption of Bitcoin as a store of value or as money. Now, the system is not set up in place yet where large institutions can allocate hundreds of millions or billions of dollars to Bitcoin as their cash balances. So those systems are currently being built and designed, but it's not in place yet where it makes it really easy. MicroStrategy had to jump through a few loops to be able to do this. But the more people adopt it, the more those systems will be built and the easier it will be. And so those are some of the attractive features of Bitcoin. Now, what was it that caused me to increase my allocation of Bitcoin for my portfolio from 1% to 5%? Well, quite honestly, it's because there's a binary outcome for Bitcoin. There isn't really going to be any possibility of Bitcoin having any outcome in the future other than it is used as base money, or it is not used at all. The blockchain technology was designed specifically and only for being used as money. There is no use case for the blockchain or for any cryptocurrency outside of being used as money. And with Bitcoin, I understand it's not efficient enough to be used for transactions for everybody, so it would be used as base money, similar to how gold has operated as base money for thousands of years. So it's either going to be used as money in the future, or it's going to zero. It's not useful for anything other than being used as money. Now, it's worth noting here that I'm specifically talking about Bitcoin in this video, not cryptocurrencies. It's either Bitcoin as money or Bitcoin zero. And within that, it's either Bitcoin or nothing. It's not any other cryptocurrency. Now, in today's dollars, if Bitcoin does get adopted as money or as base money, the fair value, if you're pricing that into the future, the value of that would mean that Bitcoin would have to be worth about $400,000 in today's dollars. Now, obviously, that is a moving target. So if the money supply doubles, the money in circulation doubles, then that 400,000 would turn into 800,000. If the total money supply cuts in half, then that would, it's a moving target. But in today's environment, with the current amount of money in circulation, if Bitcoin was base money today, it'd be worth about $400,000 per Bitcoin. Similar to how if gold was used to back up money today, to be a reserve to back up money, then it would either be worth 5,000, 10,000, 20,000, depending on the reserve ratio. So what this means for Bitcoin is that it's really an asymmetric bet. You can only lose what you put into it, but you have a far higher upside potential. So your downside potential is 1x, it's 100%. You can lose what you put into it. And the upside potential is about 40x because Bitcoin is trading at around 10,000 US dollars right now. And so for 400,000 to be considered in today's dollars, the fair value, if it is ever used as money, that means you have a 1x loss potential and a 40x profit potential. Now, side note here, I want to make it clear, Bitcoin is not money yet, because it is not used as money. Just because something has the properties of being money doesn't mean it is money. Still to this day, for thousands of years, gold is the only true money. Money is a store of value. Money is not volatile. Money's value does not change over time. The purchasing power of real money stays the same over time. That is not the case yet with Bitcoin, which means that I'm not treating Bitcoin as money. I'm not treating it as a store of wealth right now. It could turn into that in the future, in which case it will be worth a lot more, but in today's environment, it is not yet a store of wealth. It is a speculation or a gamble that it will become that in the future. So Bitcoin's not my savings account. Bitcoin is betting on the future of what savings accounts will look like. So why 5%? Because I had 1%, so what made me up it to 5%? Now, this is just a personal preference. Everybody can take this, obviously, I'm not making this as a recommendation that I'm not saying that anybody should or should not allocate, 1 or 5% of their money to anything, especially Bitcoin. But the reason for 5% is because of the risk to reward payoff to your overall portfolio. The downside risk to Bitcoin is 1x or 100%. So let's say you're working with $1 million portfolio here. A 5% allocation to Bitcoin would mean just about $50,000 goes into Bitcoin. Now, let's say the more likely scenario happens and Bitcoin goes to zero. What does that do to your overall portfolio? It takes you from $1 million to $950,000. So you lose 5% because that's what you allocated to it. Now, a 5% loss potential is about the same loss potential as your average target date fund will give the average investor that has like a 50-50 or a 60-40 split, heavier in bonds, 40% to equities for an average down year. And so according to traditional financial advice and financial wisdom, a portfolio that allows you to have a potential drawdown of 5% in 1 year would be considered a very conservative portfolio. Now, if the less likely scenario plays out where Bitcoin does become base money eventually, and it goes from $10,000 per Bitcoin up to $400,000 per Bitcoin, that is a 40x return. But that 40x return is on 5% of your money. So you've got 50,000 in Bitcoin it goes up 40x, goes from 10,000 to 400,000. Your $50,000 becomes $2 million. Add that into the rest of your portfolio, assuming no changes, means your portfolio is now worth just under $3 million. And so by allocating 5% of your portfolio to Bitcoin, you're giving yourself the downside risk of 5% and the upside potential reward of 200%. In today's macroeconomic environment where there's so much money being printed, bidding up the price of assets all across the board to where the valuation metrics are at record highs for all sorts of assets everywhere, and it's getting harder and harder and harder to find assets that have this sort of upside potential, it makes Bitcoin even that much more attractive, let alone the fact that the contributing factors that are making other assets more expensive will eventually cause, potentially, Bitcoin to start its historic upward movement. Now, we know that there will be a fight against Bitcoin by governments if this sort of thing does start to happen, if people stop using fiat and start using Bitcoin or even gold for that matter instead. Now, it's not within the scope of this video to discuss, but the technology and the way that Bitcoin is decentralized means that it's virtually impossible for a government to stop the use of Bitcoin. And there's plenty of resources about why, but that is actually the case. Now, that doesn't mean they won't try. So for part of my Bitcoin allocation, I'm doing that within an IRA because IRAs are shielded from taxes and shielded from the IRS. Now, for a long time, it has been very difficult to invest in Bitcoin through an IRA. And this is because of something called technical debt. Now, technical debt is something that shows up in any evolving system. Now, if you've ever designed a piece of software, you've likely run into technical debt where you have the choice up front to do something in a way that is easier and faster, that gets the job done sooner. But once you have to scale and it grows and evolves, what you did before is no longer sufficient for the new size or the new scope or the new purpose of the project. And so then you'll have to go back and spend more time to undo the way you built it before and then redo it in the right way going forward. And so technical debt is something that speeds up the process, gives you leverage at the beginning, and then slows you down and makes it harder later on. Now, this shows up in places other than software. This shows up in infrastructure, like the adoption for cellular technology is faster and easier and better in places like Africa, where they never had actual physical phone lines like we do in some of the Western, more earlier developed countries. This also shows up in things like utility infrastructure, where places like Mexico City are facing water crises because they've been built on centuries and honestly even thousands of years old infrastructure for things like their water delivery, where their system is not set up to handle as much water as they need, versus a much newer country like Israel, for instance. They shouldn't have all the water they do, but their infrastructure, they weren't building on old infrastructure. They were able to build brand new systems because they're such a new country, and so their water system is one of the best in the world, and they actually export water when they really, based on the region, probably shouldn't be able to. So I know you're probably thinking, what does all of this have to do with Bitcoin? Well, it means that investing in Bitcoin through your IRA is it's so difficult that it's almost impossible to do at any normal investment firm, at any one of your normal brokerages. So you're going to have to open up like a self-directed IRA, and all of these require like faxes and physical paperwork, and it's just a nightmare to invest in alternative assets outside of just your normal stocks, bonds, mutual funds if you want to invest in that with your IRA. There's a newer company called I Trust Capital, and I've talked about this company before. It is who I use to invest in Bitcoin through my IRA because they are the simplest, they're the easiest, fastest, and cheapest way to invest in Bitcoin. You can also invest in gold. Soon you'll be able to invest in silver, and they have some other cryptocurrencies there. I'm not a fan of that. I like Bitcoin, and I use I Trust Capital to invest in Bitcoin through my IRA. There is no paperwork. It's literally minutes to set up, clicking some buttons. They use DocuSign to make the actual signing of the documents really, really simple and easy for you. So it's cost effective, it's simple, it's straightforward. If you use the link in the description below to sign up for your account, you can get your first month free. Now, outside of an IRA, investing in Bitcoin, my favorite way to do it is to stack sats really on a weekly basis, even if you can do it daily, have small purchases, because the price is so volatile that the odds that you're going to be able to lower your average cost by buying small amounts every day or every week is far greater than you ending up with a higher cost. And even if you do end up with a higher cost, the asymmetry of how high up Bitcoin will go, if it goes up instead of to zero, means that I'm not concerned about slowly averaging in. I'm probably going to get a better price on Bitcoin by slowly averaging in than buying it all at once. And so outside of an IRA, my favorite way to buy Bitcoin is to slowly average in like that. And then once I have a large enough amount where I feel uncomfortable letting it sit there, I'll transfer some of it to cold storage. So that is all I have for you. Let me know your thoughts, your comments, your questions in the comment section below, and just ignore any of the scammers or the fraudsters down there trying to get you to hit up their Telegram for somebody who knows a perfect system for trading Bitcoin to profit every single day, regardless of a pump or a dump. Yes, these bots actually say that. If you want to learn more about Bitcoin, read this book. It's in the description below, Best Book on Bitcoin. And if you're ready to pull the trigger on it with your IRA, use my link in the description below to save $30 for your first month. As always, I really appreciate it. You guys have a great day.